All it takes to get started with investing is only $5. $5 a day, you invest it and then you let it grow over time, and then you look back and see what the results are. And today we're going to give you my full results putting $5 a day into Ethereum. So if you're a big crypto fan, this is what this is all about. Now, if you're following my $5 a day investment journey and you want to know the update on my stock portfolio, well, you got to wait for just another month because I'm going to be dropping that video on my 4-year update later on in January 2026. But for now, I want to give you an update on $5 a day into Ethereum, because here's the deal with crypto. It moves drastically up, down, sideways, inside out, upside down. And actually, believe it or not, on this day, this very day, December 2nd in 2024, year ago, I did a video explaining $5 a day into Ethereum. I showed you my portfolio. So I figured, why not do it exactly 1 year later and show you the intense ride it has been. Here you'll see a screenshot from my video from a year ago today. And this is my position from last year. This is a very important starting point. You'll see that the total quantity is 2.6. In fact, Ethereum at that time was going for $1,641 at a value of $9,406. My average cost, and that's over that period of time between January 2022 and December 2nd, 2024, was $19.95. And that means my total return, take a look at this and keep this in your mind for when I show you my updated portfolio today. That return was $4,201, representing 80.7%. That means, for those of you who are still new to the world of investing, I put all these little $5 a day into this portfolio. Then it grew an additional $4,201 on top of my base investment. That's what we want to see. Imagine getting an 80% return on your investment in a couple of years. That's fantastic. I don't recommend that everybody goes all in on crypto. If you are, you're playing a little bit of a game with destiny, because what I'm about to show you will show you what I'm talking about with the game of destiny. If you can handle the ups and downs of the roller coaster and you're not going to get scared and try to jump off the coaster in the middle of the ride, you'll be okay. But if you do get scared, crypto might not be your jam, which is, of course, why I'm so excited to bring you my stock portfolio update a little bit later next month to round out 4 years of consistent investments, $5 every day. So how I do this is I use my brokerage app and I simply say, hey, look, I'm going to put in money every month and I want to take from that money $5 and have you automatically invest it. So I don't have to open the brokerage app every single day. I just want you to put it in, invest it at a certain time every day. Doesn't matter what time, and that's what we'll do. And you're going to want to stay tuned, because right after I show you my live portfolio here on the screen, I'm going to show you my future projections. And what we're going to look at is how Ethereum has been performing over the last 10 years or so, and what we could look at in the next 10 years ahead. So we're going to take past data to assess potential future projections. My total quantity has gone up because, again, we're investing every day. So now I earn 3.2594 Ethereum. I mean, that's awesome. I always wanted to own an entire crypto, like a big one, not a small one. I'm talking about like a Bitcoin, Ethereum, one of those. And here I am with 3. And all it took was $5. Now look at the value. That's the tricky part. The value is now at $9,712. The average cost went up to $2,175. Remember, the reason why the average cost would go up is because Ethereum was higher. So as I'm putting my $5 a day in, and that price is significantly higher, not only am I looking good in my portfolio, but my average cost is going to go up, which means if Ethereum does eventually return down, which is what it's doing right now, the story is going to look a little bit more bleak. And that's what I'm about to show you here. So today's return, $563, and that's about 6.18%. So today's actually a good day, December 2nd, right? So 6.18% means that's how much I made just today. That's actually great, $500 made today. But let's look at the total return and compare it to what it was. And just as a reminder, in case you forgot, $4,201, that's 80.71% growth. It's now only at $2,621. Oh, now it dropped again. $2,620, representing 36.96%. There has been times I come into my portfolio, I look at Ethereum, and it's up over 100%. It goes up over 200% from time to time in this last 3.5, 4 years, right? But that's the point of the roller coaster. Now, what would we do with this case? Well, we're not going to freak out and say, oh my gosh, it's low. And look, even if it goes to 0%, or if it goes negative, and remember, negative means it's now dipping into my hard-earned $5 a day that I've been investing. My actual money, it's starting to take away that money, right? So the problem there is you're not going to sell. At least I'm not going to, right? Now, this isn't financial advice. This is just something that I kind of drill into my principle. I want to look at this long term because what I'm about to show you in the projections explains why this is so important. Because over the many years ahead, we want to grow our wealth. We don't want to just stay stagnant. And if you continue to jump in and jump out and jump in and jump out, you're actually going to end up probably not making as much money as if you would have just stayed bloody consistent. That's the point, right? So keep in mind all that, 37%. We'll see what happens next month when I come back to you with my full 4-year update on both this and the stock portfolio. But let's take a look at some projections. Now, I had to do some calculations. I had to do a little bit of research because it's not that easy to just understand Ethereum because of how volatile it really is. So what I did is I did this following research. The average annual return for ETH is tricky because what we're going to have to look at is not only the volatile and sporadic prices, but some data also shows Ethereum at under $1 if you go back into the historical days of 2015. And then some data is just a little bit sketchy. Plus, we only need to look at the price return because if we start getting into things like taxes, if we start getting into things like staking, if we start getting into things like, gas fees and all that other random stuff, this is going to be highly complex to try to calculate. So we're just going to look at the price return. And how we did this is we look at August 7th, 2015. So this is the first day with a robust market price data for Ethereum. So we're going to do that and go all the way through to today, December 2nd, 2025. And that's how we're going to figure out what the average growth percentage is of Ethereum, because I want to look ahead to the next 10 years. What is my $5 a day investment going to look like 10 years from now? So what we'll do is the initial price, get ready for this, this is where we all wish we would have invested in it back then, was only $2.77. So that's back in 2015. Now it's at roughly $2,800, let's call it $3,000, right? So it's at $3,000, and we're looking at about 10.32 years of data available to us right now. So bear with me here. If we do a little bit of calculations, the compounded annual growth rate comes out to roughly 96.8% a year. That is extremely high. That is unheard of in the stock market. Remember that a CAGR, right, is usually about 10%. If we look at the S&P 500 over the last 100 years, it averages 10%. But here we are looking at a 96.8% in 10 years. Highly, highly risky, highly, highly volatile. I can't say it enough because it's so important that people don't just go all in on only crypto. But what we'll have to do here is now come over and we're going to do a little bit of a projection map. So I'm going to bring up the screen here. And I'm going to come over to my favorite compound interest calculator. This is on NerdWallet. Very good stuff. So what we need to do is we need to look at our initial deposit as it stands today. What that means is what we're looking at in the portfolio now. So to bring that back up, we're going to round that up to, I'll round it down, 97.42. That's how much I have in my portfolio right now with Ethereum. Now, we're going to go over the next 10 years. So we're looking ahead to 2035. And then the contribution amount, let's just do some quick math. If I do $5 a day times, let's just do 365 days to make it easy, that's $1,825 invested per year. We're going to divide that by 12 months because it's asking how much am I contributing on a monthly basis. That's roughly $152 every single month. Now, if nothing happens and I get 0% rate of return in the next 10 years, my balance will grow to $27,982. That's all my hard-earned money. That's all my little $5 a day. But let's estimate the rate of return. Now, I just showed you that the compounded annual growth rate is sitting at 96%. This site doesn't let you go above 50% because, again, it's mainly for like stock investing, and that's insane, right? So why don't we just estimate based on 50% return? We're going to say Ethereum's not going to do as well as it did the last 10 years on average, right? It's going to do a little bit less, which is still extremely high. Again, we're comparing 10% in the stock market to 50%, which is insane. So I'm going to plug in 50. Let's take a look at how the magic works in the next 10 years. If I stay consistent in December of 2035, and you bet I'm coming back with a video, and we're going to compare it to this video that we're doing right now to see if it worked out in our favor or not. Total balance goes up to $812,000. That is absolutely nuts. That's all it took. That's all it took every single day. So you can see right here, as represented by this graph, it'll tell you the principal. That's your little $5 a day, and then the total interest. Right here in the year 2034, it is a total interest of $513,000, which is, again, that's the growth of the price of Ethereum. That's what that means. And then I hop up a year. Let's see what happens between year 34 and 35. $513,000 all the way up to $784,000. Pretty good. Now you might ask yourself, well, when would you cash out this? First of all, if it rises to this point, honestly, what I would do, and keep in mind, I have a financial independence portfolio. Ethereum, that makes up really only about maybe 2% of my entire net worth. It's that low. But this is exciting. And what I'll probably do is take this $812,000 in 2035, probably going to sell it at that point, especially if it's higher than $812,000. Heck, even if it's $400,000, I'm cashing that out. It's going to be a big tax bill because it's just going to be, right? It's not in a protected account. So it's going to be a huge tax bill, but I'm going to take all that profit and I'm going to invest it in equities that I can live off of, because financial independence and being able to do whatever you want, whenever you want, because things are working good in your favor because you were smart with investing, that's the whole game that we're in here, right? So I'm not going to just leave it into Ethereum, because if that thing drops again, I could go from 812,000 down to, I don't know, 20,000. I don't know. I just want to be protected. And a lot of you always ask what I'm going to do with my $5 a day. Well, now I just told you. Keep in mind that is only 2% of my entire portfolio. If you're interested in everything, because I often come in and I talk a lot about $5 a day, if you want to know my entire strategy, comment down below. And if I get enough interest in wanting to understand my entire financial independence portfolio, I'll come back and reveal it all to you and why I'm doing what I'm doing. But this is just really for fun. This $5 a day thing, it's for fun. When it becomes $800,000 in total wealth in 10 years, if that actually comes true, wow, that becomes a whole different game to talk about. The point is, instead of buying cars, student loans, credit card debt, all the dumb stuff we tend to go and do, if you just do this instead, things can look so much brighter in your future. Instead of stuff that you're eventually going to throw away. Let's be real. You buy a car, you're paying $400 a month for it. Eventually the thing is going to get too old, need repairs, or you're just going to want a new one. And now you just wasted that money and you're throwing the thing away. You're throwing the car away. That's not worth it to me. I'd rather have a nest egg that allows me to do whatever I want. At that point, I can buy whatever car I want. I can travel to wherever I want to travel. I can live the life that I want. Now, to ground ourselves for a second, let's hop really quick right back to this. And let's say, for example, we're looking at something a little bit more calm, like the actual average pace of a stock market at 10%. Now you balance it at $55,000. But let me ask you this question. If that is the realistic point of view, and you're only going to invest $5 a day or $152 a month from this point until December of 2035, and you only return 10% at $55,000, the point is you've done something versus the people that are doing nothing. And don't start with this whole thing about inflation, because it doesn't matter. Inflation does not matter when you're not doing anything. That's the whole point. Like the person that did this, that has $55,000 in their net worth, is further ahead than the person that did absolutely nothing and complained about inflation. The math, right? The math just shows that you have more money. You can't dispute that, right? But that is money. That's real money. And that is assuming you'll never invest more than just $5 a day. Imagine if you are only 20 years old right now. By the time you're 30, you now have $55,000 that you can use as a down payment on a car, a down payment on a house, something else. I mean, the world is yours for the taking. You just got to get started and you got to stay consistent. And that, my friend, is how you get your Sharpe money. Make sure you check out this video next for more cool stuff, and we'll see you on the next video.